Hello fellow traders. Today I want to talk about something that's so basic to trading that you might have overlooked it. And I'm talking about candlesticks. Now candlesticks are the basis of where the price moves over a period of time. Here's my 3-minute chart of the S&P E-mini on July 10th. And every candle, the market opened right over here at 56.43. And every candle is a 3-minute candle, represents price movements over 3 minutes of time. And as each candle forms, the succeeding candle or the successive candle either goes up or goes down. We don't know. It's impossible to know where prices are going to go. But in order to be successful in trading, you need to eliminate as much risk as possible. And this is the key to trading. Really, I'm telling you the truth. This is the key to trading, because even if the market is going to put in a trend day, and here I'm going to show you where the market actually did go, just up and up and up and up, we never know, because candles will not tell you in advance where prices are going to move, except in certain situations. And I want to point that out to you today. And again, I say to you, it's the most basic thing in trading. And what is it? It's to eliminate as much risk as possible. In fact, if you can eliminate risk entirely, you'll be a very successful trader. I'm going to take a lesson from this chart, Wednesday, July 10th, and prove the point. Now, where will candles tell you market is going to trade in the future? And as I just told you, they won't, except in certain circumstances. And what are those circumstances? At the turns. The easiest way to tell where prices are most likely to go, have the highest percentage of where they're going to go, is at the turns. So how do you know where the turns are? Very simple. Simpler than you probably suspect. Notice over here at around 11 a.m. on Wednesday, July 10th. And you see candles, they went up to 56.49 or 56.50. And then started drifting down. And at 11 a.m., they turned around. And in looking at this candle over here, these 3 candles, is there a way to tell that prices were going to reverse? Not on this 3-minute chart. But I want to take you over to the 5-minute chart. Same chart, just 5-minute candle. And here it is. Here is the 11 a.m. candle on a 5-minute chart. Do you see this doji with a long shadow to the downside after a decline? This is a giveaway that prices are going to reverse to the upside. And we can confirm that further by the stochastics, which is at an oversold level. So this would be an ideal place to trade to the long side, right? I mean, you see it. It's right here. It's a dead giveaway. You don't see it on the 3-minute chart. Let me go back to the 3-minute chart. Not so easy to see. But it's there if you look. And that's why you have to use different time frames. 5-minute charts will show you the formation of hammers and dojis far better than shorter term candles. So that's my video for today. And this is how you can eliminate a lot of risk when you're trading. Now, of course, we don't know where prices are going to go after the turn, but the chances are after a decline, prices are going to move to the upside. Trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy. Oh, and if you haven't taken a look at my Taylor calculator, go over to my site at timelessdollar.com. There's a link right over here, Taylor Trading Calculator. It's another way to help eliminate risk and determine where the market is going to trade.